Felix here, and welcome to this pre-morning, pre-market live stream. And I want to walk you through a slightly different format here today, basically respond to what most people are asking for. So we're going to look at what's up with Sofi, Palantir, Tesla, Nvidia, Apple, and Archer in that order. I'll give you the major news that we've had in the last 24, 48 hours. I'll tell you what the chart's telling us. I'll tell you what institutions are doing, what the dark pools are showing, the private exchanges, so you're the best informed investor out there. And then after that, we'll do a spot of Q&A. So feel free to ask me all your questions, think about them, prepare them, put them in there. And if that sounds good to you, then let me know. Say good in the chat. And I know that you're listening and that you're here. And we're going to have a lot of fun this morning, as we always do. Pre-markets looking slightly mixed, I would say, which is better than terrible, but slightly mixed. Now to the 800 of you who are here, I appreciate you. To the 96 of you who smashed the like button, I love you. So let's get cracking here. And I've prepared some research for you. So let's kick it off with stock numero uno, which is Sofi. And first thing that I think most people are not noticing is that institutional ownership is going to the moon. And it's by far the biggest volume and quantity of institutional ownership that we've seen in Sofi here since it listed. I mean, very significant moves up. And that's a positive because institutional money is stickier, it sticks around, it helps to make the stock more stable. And it also shows that institutions and analysts are starting to understand that there is something here. So that's definitely a good thing. So that gets a nice little blue check mark from us here. And I'll get onto Tesla in a second, guys. This here is causing some speculation. Trump assigned an executive order that enables the Treasury to modernize its payment system. Okay, now there are rumors that Sofi could be getting a contract here to run the payment system for the Treasury. Now, what's the basis of that? Well, the US Department of Treasury actually already works with Sofi's backend, which is called Galileo, for Direct Express, which is a prepaid debit card program that about 3.5 million people use to get federal benefits. And that's according to Anthony Noto as of January 28th. Does that therefore mean they're definitely going to get the other contract? No, of course it doesn't, but that's what the rumor is about. So I want you to be aware of it, not necessarily act on it, but just be aware of the rumor and see if it's something that starts to show up in institutional trades. Now, how would you know if it starts up in institutional trades? Well, go to tradevision.io and there's a link down below where you can get yourself a free trial to this. And this is what the chart looks like, right? So the first place I would look for institutional heavy buying on this rumor would be if volume moves up. It hasn't so far. We've seen a very nice rally up here since we were in sort of $11. We're at $13.54 right now, down ever so slightly. But we haven't really seen the institutional buying. Now, the second place I would look would be here on the right. We've got dark pools. And for you Trade Vision users out there, do you like the new menu? I literally kicked that off about 24 hours ago because one of you wrote to me and said, I don't know what these icons mean. And I said, you're completely right. So now we've got this lovely little menu here, which is a lot more useful. And we have a dark pool section. Now, what are dark pools? Dark pools are private exchanges where the big boys trade privately. So say if you had a lot of Sofi stock, like, a million of them, and you wanted to sell them, you wouldn't just go into the market because the price you'd get for the last share would be lower than what you would get for the first share, right? You would make the market go down. So what do you do instead? You ring one of your friends up at say JP Morgan or Morgan Stanley. And yeah, I've got a bit of I don't know if it's hay fever or something. My nose is feeling a little stuffy. Thank you very much for noticing. And yeah, you'd ring them up and say, hey, I've got, say like this chap here, I've got, a lot of money in Sofi. These are actually options, which is where most institutions trade, and say, I'd want to sell them. And then they'd agree a price privately, and that's the transaction done. There's no stock exchange involved. There's none of that price discovery nonsense. It's all private. So you can see here whether the market's feeling bearish or bullish. Now, the first thing I would say is that these trades are not very large. They're all fairly small. So institutions are still not doing that much with it. And there are also not many trades. So I wouldn't read too much into it, but it's going to be a lot more useful for some of the bigger stocks that we're going to look at in a moment. So is this good or bad for Sofi? Well, it's rumors are always good. Buy the rumor, sell the news is usually the way it goes. From my perspective, I'd love to buy more Sofi, but I am cautious to do anything until we fill this gap from that yellow line there, which is the 50-day moving average line. And those of you guys who've learned what this is really all about, you understand what that means. And honestly, my whole intention here today is just based on the fact that I think it's very important that we share with retail investors, that's like you and me, the same kind of information that you'd have access to if you were working on Wall Street. Because I think we deserve to have the same information edge so that, well, you actually can make better decisions, right? And for the same reasons that I'm running you through this here live of us together, is you can ask me questions. I've also put together the actual rules, which I call the Wall Street Protocol. And that's what most successful traders in the world have been using literally for decades. And I use them, we use them every week, and we're doing very, very, very nicely with it. It's much simpler than you think. It's allowed me to retire and enjoy my life. And you can actually learn the foundations of that in literally 15 minutes. And how do you get access to that? Well, it's completely free of charge. And all you got to do is, well, join our little mission here, which is to make 1 million people financially free so that more people have time, more people can enjoy their life, more people can take their hounds out for hikes on a Wednesday morning. Is it Wednesday today? I hope it is. So all you got to do is go to felixprehn.org/get-free. The link is down below, and you can watch that masterclass right now, actually. It's probably better to watch it right now. You can do it tomorrow or next week or someday, but that basically just means you're never going to do it. So if you want to take that action, do that right now. I'll also put the link for you in the chat here. There it is. See, we're getting quite high tech here today. I've got some new buttons set up, which is very, very fun. So there you go. You can access that. The link's also down below, but I'll also pin it to the chat for you so you can find it more easily. But let's move swiftly on to stock number 2 here, which is Palantir. So we're going to run through all of those. There it is again. And the whole point of this, one, stop missing the breakouts, because it sucks when you miss big opportunities, and you're missing big opportunities almost every day. And I also want you to learn how to protect your gains, because you wouldn't be feeling the queasiness that a lot of people have been feeling over the last week or two when the market's gone down 9-10%, because you would have protected your gains, right? I'm sitting on a lot of cash right now because I protected quite a lot of my gains, and therefore I'm feeling pretty happy. And I'm like, let's look for some opportunities, right? So I'm looking forward to that. And we'll touch on that in a moment as well. Now, Palantir here, and this is a screenshot literally from TradeVision, so I can show you the original too. And I'm super excited about this. In fact, I'm so excited about this, I'm actually working on a video on this because I think this is such a big topic, and I want to dive a little bit deeper into this. Vincent, you're a back holder on Max 7 stocks. Ask me that question again in like 5 minutes once we run through these stocks, and I'll have a look at those stocks with you, and I'll give you some real input on what I think might be a smart thing to do there and how to play this. So yeah, they've announced a partnership with Everfox here. And again, you can get access to that live analysis and news literally from TradeVision, which is the platform that we build. And it's a really, really, really cool thing. It basically combines, so Everfox does some kind of access control to secure information, right? Different, top secret, that kind of thing. And they're combining that with Palantir's AI data platform and command and control, and it'll allow all that information that's currently separated, right? So say you're on a battlefield, someone's shooting at you, there might be information that comes from some satellite or some source somewhere that's top secret. So you on the ground there, the commander, you haven't got access to that information because you haven't got that security clearance. So it would probably take hours or maybe a day for you to get access to that information, where which guys, your guys in front of you are suffering. So they are going to combine all of those data sets and they can kind of sanitize the source and the details you don't want to share with somebody who doesn't have the clearance, while still giving him the benefit of the information that's actually going to help protect, the people on the ground, or make better decisions. So that's really, really insanely important. And what it means to Palantir is it just opens up a whole new world of total addressable market. I mean, I'm thinking literally billions a year in recurring revenue. So to me, this is really, really big news. And I will, as I say, make a whole separate video for you on this, but I didn't want you to sort of hold you back on this, because this is a bigly one, so to speak. They also got, you see that here? They got included in the S&P 100 on March 23rd. Nobody celebrated that, right? And that's a big deal. It's one of the largest 100 American profitable businesses out there now, which is pretty insane. It's the largest defense contractor now, by the way, who don't really make any defense goods. So that's Palantir. In terms of the stock here, John's asking, where are the support and resistance lines derived from? What's the data source? Okay, that's a very, very good question. We do, by the way, have a little help section here, which I think explains that. Support resistance levels. Yeah, we explain that in pretty much in depth. But essentially, what it's all about, there's even a video that we've done on that, but essentially it is based on the options market. So we have access to, all the options data in the world for all the trades into the future. And from that, we can deduce where will institutions and market makers, so basically the big institutions, where will they sell? And that's the resistance. So they'll sell here at 100, and where will they buy, which is at 85. So it doesn't mean that you can't break through the resistance, but it's harder because those guys are selling. So if you're trading slightly below it, it might not be the greatest entry point. You might want to wait till we move above it. And same on the way down, it gives you some idea of where support lies, which can be very useful. We've even started to record historic data of this, which literally nobody in the world has except for us. And that shows you how useful this was also, right? So you can see here, our support was very, very good. We broke down a little bit there. And then our support's now back to where it was while we're moving up. So that can be very, very, very useful. And when these support lines start breaking down, you want to be worried. Basically, you want to take your risk management a lot more seriously than you perhaps otherwise would. So that's a very useful point of data there. And then, of course, you could secondly also go and look at dark pool trades again for Palantir and see what's going on out there by just typing the ticker in there as well, right? Now, third stock on our list today is, of course, Tesla. We're running through them in the order of the title, by the way, so that's useful for you. Again, let me know in the chat. Just put a 1 in the chat if you're getting some value out of this, and smash the like button while you're at it as well. Now, Tesla. I know there's a lot of pain in Tesla. I get that. Although we had a nice little rebound here. We're at 1.3% down this morning. This is just out, and Tesla has announced. Literally, this is the official Tesla account tweet. And they're saying the future is autonomous. It starts in Austin's this June. Thanks for all the ones there, guys. Jip, thanks for the 4 ones. I'm loving this even more. And is there a way to see volume of the dark pool trades? Well, you can see the size of them, my friend. Yeah, you can see the size of them. So it tells you that. And we're also working on like an indicator. I kind of want to do that for all the major stocks, have an indicator of how bullish or bearish the dark pools are, because that will be a lot easier for you guys to read than actually go through the data set. So that's a thing where I set into motion just. Now, some people, of course, are going to come out and say, well, literally somebody in my comments yesterday wrote, well, the reason everyone's selling Tesla is because Elon's a Nazi. And I'm like, what makes you think he's a Nazi? And he said, well, because he did a Roman salute. And I'm like, are you serious? People actually believe this. That guy was German. Germans tend to read a lot of mainstream media. So it's just one of those things where you can put this out there. And by the way, a lot of the German mainstream media has been getting US aid funding for like decades. So of course they're going to hate the guy who's taking away their money. But anyway, is this true? Is this like one of those things where you go, oh, well, this is a nice announcement, but maybe it's not going to happen? What does it mean? Well, what made me feel a lot more comfortable about this is Sawyer is a great chap if you want to follow Tesla. And he screenshotted a bunch of these posts from actual Tesla from actual Tesla employees. And they're saying here, hi to anyone who doubted us launching Cybercab, starts this June thanks to Austin City, the future's autonomous. So it does seem to actually genuinely be launched in Austin in June. Now, I don't know at what scale, whether it's 10 or 50 or 100, or whether it's a test thing, or we don't know the details at this level yet. But the important thing is that it's starting and it's happening, and that's pretty soon. June is pretty soon, which is what they promised, what they announced. So a lot of people are starting to see that, and I think that's some genuinely bullish news there on Tesla. Now, the stock is still somewhat down in the dumps, and it's still trading well below the yellow line here. That 50-day moving average line is sort of where most traders will say, okay, this is where I want to get into on this. But what I'm liking, and thanks for all the comments there, guys. We will do a Q&A in just a moment, so we'll get to that. What I'm liking here is that as we are moving up, excuse me, I think I've got hay fever or something, some sort of allergy thing going on here. We're seeing more volume going down there. You see that? You see these volume bars down here, these ones, right? They're starting to move up. I should probably separate that a little bit to make that a little bit clearer, right? So stock is going up and volume is increasing. That's exactly what we want to see. So if today turns out to be a red day, it may or may not be. I mean, there is going to be a lot of pension fund buying and algo fund buying into the end of the week, but that may not happen today. But anyway, it's possible. You know, we don't really know if the day starts like this, doesn't necessarily end like this. Tesla is very volatile. So that has me somewhat positive, but I needed to break through the $300 resistance line, and I needed to go back above that 50-day moving average line up here. So I've kind of got like 2 nays and 1 yes at the moment, or maybe 2 yeses on the chart front. So it looks all right, but it's not looking, you know, oh my God, this is the most amazing thing. Now, what I want you to do is, rather than ask me the same question and think about the same question for every single stock out there, is actually learn, right? How do you learn? Well, you go, hang on, you go here, felixprehn.org/get free, and you actually learn how you stop missing out on the breakouts, and you learn how you preserve your gains and your wins so that your green numbers never become red numbers, because it sucks, it doesn't feel good, right? Most of us have experienced this in the last couple of weeks. Now, next on the list is Nvidia, and we're going to rattle through these as quickly as we can, so we have some time to do some Q&A. Charles, you think the salute is truly Hitler? The thing is, though, Charles, you can find Obama doing the same salute. You can find like literally every politician out there, because all it is like, if you're standing in front of an audience, and I'm obviously not going to do it, but you know, what you do is you go, you know, thanks, guys. And if you did that with one arm, you know, sort of thanks, guys, and you do that with one hand, then it would look exactly like a Hitler salute, which is just ridiculous. So all he did is he sort of did this, and it's like, you know, I appreciate you, stretched out his hand as you would like that. I'm doing with both hands because I want to be safe. Someone's going to take a screenshot and, you know, make accusations. You never know. You know, people are a bit nutty out there at the moment. So that's all it is. So if you watch that and you watch the intention with which it was done, and then you Google other politicians doing the same salute, you're going to find literally every single person out there doing that, and it's therefore a completely ludicrous thing to put out there by people who don't like their funding being cut off. So yeah, it's just nonsense, really. Now, we got some nutter in here, have we? Who's the psychopath? Okay, never mind. I don't mind nutters, by the way. And you need to look up the definition of a Nazi. Yeah, a Nazi, and I'm saying this as a German, right? Born German. Nazi is somebody who wants to exterminate another race, kill millions of people just because they didn't like them, right? Is Elon doing that? Is that the guy who's, you know, pushing the boundaries of science and sending stuff to space and you know, building? Is that really the same guy? I mean, it's just a bit idiotic, really. But anyway, you can't help everybody. Do you miss Germany? Nope. Nope. That came out a little bit quick, didn't it, for the Germans? But no, not one bit, to be honest with you. I very rarely go. I'm actually going to Switzerland in a little while, but no, I very rarely go to Germany. I don't think I'm feeling out, like I'm missing out on much there. Now, Nvidia, what's actually the driver here? Well, if you really go through the presentation that Jensen just did, everyone's thinking that the spending on data centers, which is what this is here. This is data center spend is going to decline, right? After 2025. That's what the Wall Street's worried about. They're like, yeah, all these guys are going to cut spending. Well, Jensen is saying, nope, it's going to go up into 2026, into 2027, and by 2028, it's going to be $1 trillion, you know, with a cat stroking it. Now, while you might not believe the man, he does make a fairly good point, and that is simply that everything is going to be computer, as President Trump says. And if you think about all the AI applications actually going into the real world and all the robots and everything being fully automated, the compute power to run that is going to be extraordinary. So I think he has a point. Now, he's obviously making his own case, but I think he's got a point here. And then to all the people out there, and again, I put out a video on that, which is, do I therefore buy Nvidia, or is there not AMD who's cheaper? Well, this is the data center revenue of Nvidia in green. So green is Nvidia. Let me get a green pen. NVDA. And then we have in gray, we have AMD. And you might come to the conclusion, oh, well, there's therefore a lot to catch up, right? AMD might grow a lot, and it's therefore the bigger opportunity. Well, what's the valuation metric? Right? Nvidia has an EBIT, forward EBIT, so next year's EBIT multiple of 22 times. How much do you think AMD's is? AMD's, so this is AMD. What do you think AMD's EBIT is? Anybody venture a guess? If you're right, I'll you'll win a lolly or something. Now, you told us to buy AMD, James. I did no such thing. If you watched the video to the very end, I told you the exact opposite, my friend. So don't judge a book by its cover. Watch the videos to the end. Now, anybody? Scott says 45. Not that far off. Kingslayers thinks it's 6. Jaguar thinks it's 4. Interesting how low some people think it is. 69, you're just being naughty. Now it's 22. It's also 22. So you got to ask yourself, do I buy the proven leader, the proven winner, which is Nvidia, which has had this tremendous growth, scaled, absolutely dominates the space, has got more money than they ever need for all the research in the world, leads across all GPU sectors, has all the big customers. Do I buy them at the same valuation as the guys who maybe at some point will catch up a little bit and they cost exactly the same? Right? You got to ask yourself, does that make sense, right? Just want to make clear, these are forward EBIT numbers for both of them, same valuation. So to me, makes no sense to buy the next Nvidia. I just rather buy Nvidia. Now, do I therefore want to buy Nvidia at this particular price point? Well, that's why I asked the chart, because the chart tells me everything, especially once you've watched the masterclass down below. What is EBIT? EBIT is basically earnings before interest and tax. So it's a profit measure, right? It's a profit measure. There's no perfect profit measure, but as long as you use the same ones, the comparison point becomes pretty good. Now, if you buy both and you buy the lower price one, if you don't have as much money to get more shares, says Austin. I'm sorry, Austin, but with fractional share ownership, that again makes very little sense. It makes very little sense that you own more shares at a lower price point, because it's about how much money you have invested, right? So if you have $1,000 in Nvidia and it goes up, say 10%, you make $100. If you have $1,000 in AMD and it goes up 10%, you still make $100. It doesn't matter how many shares you own. It's completely irrelevant. So the share price itself makes absolutely no difference whatsoever here. So that's what I would look at with NVIDIA. It's it's just, if you want to be in that space, you want to invest in chips, that's the one I would look at. Obviously, you got to come to your own conclusion. What happened to my news? Here's my news. And yeah, we obviously summarized a lot of that stuff in here as well. There is a tariff impact concern for sure. And that is just that, well, you know, how hard are they going to hit the countries where Nvidia is presently making chips or buying components from? That's a question. And that's something to, I think one of the reasons also the stock's a little lackluster here. And what I see on the chart, I don't like. Now, what is it that I don't like about it? Well, you can tell me what you don't like about it. What I don't like about it is stock rallies, volume falls off. That's not good. No bueno. Yeah, not good. 50-day moving average line, sloping down. Not liking that either. So I don't like that. I don't like this. I like the stock going up broadly. But yeah, I'm not convinced by this recovery at this particular point. Winston got my dog pregnant. Little J, paternity test. It seems fairly unlikely given Winston's state of manhood. That's how I got him. You see, I adopted him, and he was already sort of snipped, if you know what I mean. So it seems like, I mean, immaculate conception. There is a whole religion based on that concept. So, you know, you never know. It might work for dogs too. Now, Apple, I wanted to give you some good news on Apple. I looked long and hard, and I found this. Apple is in the process of ordering chips, about $1 billion worth of chips from not AMD, but Nvidia, which is about 250 servers. And they're working with Dell and Supermicro to build large cluster servers to support generative AI applications. They're not the earliest to the party, but that's okay. Their user base is quite patient. And that's good, right? Is that good? Well, think this through. What were we excited about with Apple? They were going to develop their own chips intended for server use. What are they building? What are they buying? Servers. Whose chips are they using? Nvidia's. So it seems that either progress is moving slower than expected on the chips, or Apple decided that they need Nvidia servers regardless. So not, again, the greatest story, is it really? It really isn't the greatest story here. So what do we, can you get the news articles linked in TradeVision? Yeah, they link out. The ones at the bottom link out if you want to get access to those for sure. So I'm not loving that. Stocks, unimpressed, but it's just sort of, it's recovering a little bit. But again, like much of the tech sector, it's gone up, but no one's buying. So we're below the resistance at 225. That's in TradeVision and only in TradeVision, and it's insanely useful. So get yourself a free trial to that, so you'll never know, buy at the wrong moment again. Support held very nicely down here, for example. And we also have that here. What is that? That is what some people would call a death cross. It's the 50-day moving average line crossing the 150-day moving average line, which is a horrible thing to happen. The last time that happened, where was that? Crikey, we have to go back far in time. The last time that happened was here in March 24. Actually, it wasn't so bad, was it? We actually only went down about 8% from there. It wasn't as horrible as I might have thought. But yeah, generally speaking, not seen as a sign of strength of a stock. So not liking this one little bit, to be honest with you. I kind of wish I didn't own any Apple, but it's hard to avoid when you buy index funds occasionally, which is what I do sometimes when I don't know what else to do. ACHR. Now, there is almost no news on this whatsoever. Really, the last bit of news, and I made a separate video on this, is the partnership with who? Does anybody know? Anybody remember? It's, of course, the partnership with Palantir on the one side, Palantir, and on the other side, it is Anduril, which I always think sounds like cough mixture. And then in the middle here, you've got Archer. And they have this three-way, basically, which means they all work together. And I think that could be very, very good news for Archer, because I think they're going to get some really nice government defense contracts there. But we haven't seen it yet. And Anduril, yeah, it's difficult to spell, isn't it? I'm sure some of you guys are seeing the same problem there. So is that a good thing? Well, look, the chart is more promising than most. We are very close to the 50-day moving average line, slightly below it. So it's sort of neither here nor there. But again, volume, yeah, at least we had a nice big rally day here, but not a lot going on since. I think everyone's just waiting for news on this one. So I would expect this might move sideways for a little while. I do like the stock. I think it's a good setup, generally speaking, but we haven't yet seen the real oomph here because of the tariff situation. By these metrics, we won't be able to buy anything until the dip is over. And you know what the hardest thing is as a good investor? Doing nothing. If you want to buy something, I mean, what I've been buying, two things I would buy. I would buy the S&P and maybe the QQQ. I'd probably buy the S&P, which is what I've been doing, because you can buy that on the cheap, and that's usually a good thing. So when that's below the 200-day moving average line, and we're slightly above it again, but still pretty close to it, traditionally, that's pretty good. I'm quite happy to buy the index at a 10% discount. But individual stocks, no. Why not? Because they can go down a lot, like a lot. The index can't. The index on the long run will go up. It's a big distinction. You can't mix the two up. People do that. People say, oh, everything will go up. It's not true. A lot of stocks that, went down a lot. Remember this one? Remember this one? That was a big one in 2020 or something. Plug, right? Can I get that on the one screen? It's trading at $74. It's trading at $153 right now. You could have bought that on the dip many, many times. And many people did at 23, at 18, at 12, at 11, at 7, at 3, at 2, and now at 153. Isn't it cheap? So you could have destroyed all your money. So that's my warning to you. And most people learn this the hard way, honestly. And then they just say the market's manipulated and walk away. And maybe it is, maybe it isn't. That's a kind of a beyond the point. The point is, if you follow the same rules that Wall Street follows, they're not buying this. You won't find a single institutional trader who buys this. You won't find a single successful investor who's buying this or buying, say, AMD on the cheap or wanting to buy Apple here. Like, they just don't, because it goes against all the rules. It's just that we haven't been told the rules. You haven't been told the rules. It's not your fault. It's like the education system's fault or Wall Street's fault or whatever. But fault doesn't really get you very far. What gets you far is taking matters into your own hands. And that's my little contribution to our lovely community here, is to give you that information. And you can do that by going here, felixprehn.org/get free. Learn when these breakouts happen, so you to stop missing out on them. And at the same time, protects you from selling in the wrong moment or holding on in the wrong moment. And it also prevents you from buying things in the wrong time. So that's what you're going to learn if you do that. Why not buy AMD chips? Says Sebastian. Did you see the plug chart I showed you? You could have bought plug cheap, right? It was cheap at 23. It was cheap at $44. It was cheap at $70, $60. It's trading at $1.53 right now. So you don't want to do that. You really, really don't want to do that. The point in time charts, well, look, it's the chart right now for a lot of these stocks looks exactly the same. We're below all the moving average lines. It looks absolutely rubbish. And every time it moved above the moving average lines, there was falling volume, right? So it's just one of those things that you got to learn the rules. You see that rally up there, right? That looks pretty good, right? Oh my God, we're at the top. And then look at volume. Not a lot happening here, right? And then what happens? You collapse, right? And when you get the big volume spikes, when you collapse. So it's the market telling you that people are dumping this. And we're seeing a lot of that with a lot of tech stocks at the moment. So be careful out there. That's all I'm trying to say to you. Now, this is the pre-market, but the market is, of course, already open. And we're looking a little glum this morning. Tech finance stocks are looking a little bit better. Tech stocks are selling off a little bit after the bounce we've seen. Not massive ones, but Nvidia and Tesla being down 2-point-something% isn't brilliant, but really the warning sign, and that's what I'm trying to get across to you, is here. Rally, no volume, right? Volume is falling as we are recovering, and that should be a warning sign. And As I say, get all the structured rules in one place, take you 15 minutes. You go to felixprehn.org/get-free and let me know in the chat if you're going to do that. Put one in the chat if you're going to go and watch the masterclass and actually learn the rules to become a better investor. And I know that you're listening. Free mind, how come I don't see the smart money? I've renamed it dark pools because I think it's a lot more descriptive. So you can still see that here on the right. It's the same place. Now, Asso and Brian and Doug and Life and Fraser and Strange and Kevin, you're going to go and watch it. And Carlos already did. P4Q already did yesterday. Brilliant, my friend. And Aaron and Mikkel and Aaron, you're all going to go and watch the masterclass. Jibs watched it 3 times. Brilliant, my friend. I love that. Brian as well. Aronius as well. So join these guys, my friend. Join them and learn. Brevin says, watch the masterclass several times. Great info, brilliant. Watched it loads, joined your program. Lauren, love you, see you in there. Watched it multiple times, learning a lot. That's exactly what we want, of course. And again, a lot of you guys are watching it multiple times, which is a good thing, which means there is good information in there that you want to really absorb. Mark, you watched it yesterday as promised. I love that you keep your promises. And so many of you watching it multiple times. It's amazing. Thanks very much for that. And I have a little button now, which allows me to actually put the link in here with the push of the button, I think. Hang on. No, that's not it. This is it. There we go. See how clever that works? Brilliant, isn't it? Every day here is a masterclass. Jamie, appreciate you. Thanks for that. Thanks also to the 560 of you who've found the like button. Appreciate you even more because it helps to spread the information to more people. That's just the way the YouTube algorithm works. It's just that you hit the like button, it shows it to the next person. The next person hits the like button, it shows it to the next person. That's kind of sort of like pass the parcel, really. It's like watching Godfather. Funny. Winston Cam, yes, it's actually here, but there's no Winston. There's actually a camera here, but there is no Winston because I left him in the kitchen. He was a bit sleepy. He did a hike this morning at 5:30 a.m., so he was a bit sleepy. But yeah, the Winston cam is coming. And Dr. Denise, appreciate you sharing our information as well. That means a great deal. Are we still drinking electrolytes every day? Yep. At the moment, this is what I'm drinking. I know we're going a little off topic. This is it. This is unflavored. I'm not sponsored by this, but honest. It's just basically sea salt type of stuff, powder. It doesn't taste amazing, but I don't like the flavors. But if you want something a bit more interesting, tasty, something like this is a bit more tasty. But that stuff's also a lot cheaper, the powder, so I like it. Do you cover Japanese stocks? I don't look into them that much, to be honest with you. I have a little bit. I think the safe space in Japan is the big trading houses. What are they called? Itochu and Marubeni and all those guys. Basically, the stocks Buffett's buying. I think that will probably for a foreigner be the safe place to be. Not that easy to buy them, to be honest with you. Most brokerages don't give you access to Japanese stocks, and you could buy the index. Not a huge fan of buying indices of foreign companies, generally speaking. Cheryl says, my weakness is exiting stocks at the right time. And Cheryl, look, probably out of the 2,600 people watching here, 2,550 had the same issue over the last couple of weeks because we've been so trained that everything goes up, right? So if we look at the Palantir chart and you're like, well, it's always going up, so I don't want to sell. Well, what if it goes higher? You know, that's sort of the trick that our mind plays on us because it's been going up for so long that we find it hard to exit. But doing it would make sense. And why would it make sense? And I think you have to really understand that and actually run through some examples and kind of write it out for yourself. So you could have sold up here up there at about $120, right? That would have been kind of where your rule book could have kicked in. Maybe you were a few dollars lower. So what does that mean? Well, say if you wanted to buy right back in now, just to make my maths easy, at $100, right? So if you had 100 shares at $120, that would have been 1, 2, 0, and then 2 more zeros, $12,000. This is just a simple example, right? So if you're going to buy back in now, you'd have $12,000 and you're buying at 100. So you had 100 shares up here. What are you getting at 100? Well, you're getting 120 shares. So you see what you've actually done by using risk management. You have grown your Palantir shareholding from 100 shares to 120 shares. So provided the market goes up, you are making 20% more than you would have done otherwise without risk management. Does that make some sense? Does that make some sense to you? Right sense in the chat. Otherwise, I'll gladly run through this again. So if you started with 100 shares and you exited up here at about $120, you would have received $12,000 in cash, right? And then say you were going to buy back into Palantir at $100, which will be $3 or $4 higher than we are right now, somewhere here. That $12,000 at a $100 share price would now buy you 120 shares. So you got 20 free shares, right? 20 free shares because of that. Thanks for all the sense. And that's the beauty of risk management. And people don't talk about that because they always just think, but what if I miss out on the next rally, right? Well, it doesn't really matter because it also doesn't matter whether you make the money with Palantir or some other stock. And again, we get emotionally attached to stocks. It's irrelevant which stock you make money with. If you just zoom out for a moment and you think about it, like in 5 years' time, do you care whether the extra $10,000 or $100,000 you made came from a particular stock? No, it doesn't, right? You just want the money. You want to go on holiday, you want to retire, you want to buy a nicer house, nicer cars, and your kids to college, whatever it is that you want to be doing with the money. Maybe you just want to reinvest it. You just don't care because it's money and it doesn't really matter where it comes from. So don't get attached to stocks and learn risk management. That's really all I'd say to you. And it makes a lot of sense. Doug says hindsight is 2020. It's not about hindsight, my friend. And I know people always think that charting is all about hindsight, but no, it's the same thing. Like the reason I'm telling you now, I'm buying stocks or not buying certain stocks is the same rules. And it's what people have been doing for decades. It's just we haven't been taught this stuff because we weren't deemed worthy, essentially. So Michelle says, be an equal opportunity moneymaker. Precisely. Just go for the best opportunity. The best opportunity. And you won't win every opportunity. That's also just the truth of the market. If you want to get a guaranteed return, well, you can buy bonds, you can make 5%, right? But if you want to make 10, 20, 30% or more, then you're going to take some risks. And then we're going to limit our risks so that one thing going wrong doesn't affect us. And that's really the real lesson here. What else we got here? Any other stocks you want us to look at? Thanks for the 670 likes, guys. That's very generous of you this morning. Only about 2,000 people who are too stingy to hit the like button, or maybe not logged into YouTube. That's also entirely possible. CVX. Scott is asking. Wow. Yeah. We're seeing that on quite a lot, right? There is also, I looked at Marathon Petroleum as well this morning. And that's, what's the ticker? Marathon. Why does that sometimes not open? Here we go. Which is also looking quite nice. But again, not really missing the volume a little bit there. But let's go back to your CVX thing. Well, you know what I'm going to say, don't you? Because you're one of my students, so you kind of know how I'm thinking. So what do I like about this? Well, what I like about this is that it's been a pretty long period of consolidation, right? I like that about it. What do I not like about it? Well, we haven't really seen huge volume. There was this one here, 21st, but I think that was options expiration day, wasn't it? Yeah, so you can kind of discount that. So we're going up, but volume isn't. And that concerns me a little bit. That's really what bugs me about this a bit. We're also only a couple of dollars below the resistance here, which is, maybe not as important, but still. So yeah, it looks good, but it's just like, where are the institutions loading up on this, right? Where is Papa Buffett buying $100 billion of this? He's not doing it because otherwise it would show up in the chart. Austin's worried about capital gains. Look, taxes are only an issue when you're making money. So the very fact that you get tax bills means you're making money. So there are obviously ways to optimize that, but you don't want to be thinking about an individual transaction, an individual investment, and think about tax. It's the wrong thing to do. It's going to make you do silly things. What you want to do instead is at the outset, before you start investing, think, what's my tax planning here? And that could be a Roth IRA or, whatever tax wrapper sort of type things you have available to you, depending on where you're based in the world. And then once you've done that, you just got to accept, this is where I live. I don't want to move, and therefore I'm going to have to pay these taxes. So if you pay 25% capital gains tax or something and you got a gain, well, you still keep 75% of it. So are you going to stop making the 75% of the gain because you hate taxes that much? Well, it makes no sense. I know people do that, but it makes no sense. So it doesn't really factor into my decision-making, whether or not there's capital gains tax. Right. Anything else out there? Monthly investments into QQM, Henry, that's a great place to be, my friend. And so what Henry is doing there is he's investing in a pretty cheap index fund, which is the NASDAQ QQQM, and he's just buying it every single month. And what's that going to do? It's going to give you a nice, sweet average that is essentially going to be pretty much my yellow line there. And you're going to be buying the tops, you're going to be buying the bottoms, and overall you'll average out and you'll make money in the long run. It's a great place to be. It's much, much better than what 98% of people do. And yeah, keep doing that, my friend. Keep doing that, my friend. Sandra Zim. Yeah, I still don't own it. And I think there seems to be a real issue with people seeing one of my videos and feeling like they ought to take action on the basis of half the video. Because I said very specifically in that Zim video that I'm not buying it yet because I'm not seeing the chart set up for it. So yeah, you got a nice dividend, which might help offset that drop there. But the chart isn't saying buy. And that's important. Very, very important if you want to make money on a trade like that. Because I don't think Zim is a stock you're going to want to hold for the very long term, because shipping is very, very cyclical. I mean, zoom out, right? This is this is Zim, right? So you don't want to be doing one of these things where it goes from 90 down to 6, right? So just because it's trading at 15 doesn't mean it can't go to 1 or 0. So it is one of those things that I would be a little bit cautious with. And at the moment, I'm just not seeing the buy signal. I like the story, and I explained that story, and that's the background to it. But I still need the chart to say, buy me, buy me, buy me, please. Is weekly or monthly better? Weekly is better. Invest weekly, you have 52 chances to invest, and it'll also motivate you a heck of a lot more. So actually, daily would be best, but weekly is probably the sweet spot. I do weekly. Advanced money destroyer, it's still destroying money, I fear, isn't it? Well, it's actually, it had a nice recovery. I mean, it's up significantly since the bottom of the market here, about 18%, 18.88%. It's a very lucky number for the Chinese. Now, is it enough? No. For me, it isn't enough. And I tell you why. We're above all the longer-term moving average lines, which are up here at 133 and 139. And you might wonder, well, but Felix, why wouldn't you want to buy it cheaper? Because people have been saying it's cheap since, here $140. They were saying it was cheap at 130 and 130, and then at 129, and then at 120, and now it's at 112, and apparently it's still cheap. So it could go a lot lower. And once you understand that the likelihood of it going lower when it's at these levels is much greater than the likelihood of it going up, well, you've learned a lesson probably the hard way, because most people seem to learn it the hard way, or you've just thought, well, I don't want to stumble around and figure this out on my own and lose a lot of money in the process and get really frustrated. I simply want to learn the rules. And you've gone off and gone to felixfrenzel.get free and actually watched the rules. And once you have the rules, you will not buy falling knives like this, what this is. You will stop missing out on the amazing opportunities that we get presented with every week. And you'll protect your gains when you actually have them, right? Like a lot of people made a lot of money on AMD here, right? Where was the last breakout? Well, There was a very nice rally up here in 2021, right? I'm sure a lot of people came bag holders afterwards. There was a beautiful rally up here, and there was a way to sell near the top, not at the top, but near the top. You could have sold here, and that would have been pretty good, right? That would have gotten you out at about 180, and you would have bought in somewhere down here at about 110. So you would have made about 60% on that rally, which is pretty sweet. Why is the market selling off today? I think it's just a little bit just Trump being Trump. I don't think it's really the hard data. Yeah, there is a little bit of data out today. Let me have a look at it. That's also in Trade Vision. And durable goods orders, they look all right. They look pretty good, actually, pretty strong. I mean, maybe they're too strong and therefore we're not going to get rate cuts. Is that what you're thinking? I don't think that's really it. I think it's just sort of the general uncertainty around 2nd of April, which is coming up. People are going to start to hedge. When people hedge, they tend to depress the market a little bit here. And Trump ways imposing copper import tariffs in weeks, not months. So it's just like back and forth. The market doesn't like it, right? The market really doesn't like it. And yeah, that's basically what it's all about. Like, there's just a lot of uncertainty out there. So the market's like, flipping around a little bit. It's not too terrible. Financial stocks are doing pretty well. Apple is green, which doesn't make a lot of sense. So a lot of the market is actually quite green. It's just the big tech stocks that rebounded yesterday are just bleeding a little bit. Fox, thanks very much for sharing the link there to Trade Vision down below. So if you guys want to get access to that literally for free for a week, there is the link down there, and you can play around with the same data that I'm looking at, the same news that I'm looking at, the same indicators, and track your portfolio and crash the page like I am here. So QQQ or QQM, please. Oh, I literally am crashing the page, aren't I? What's going on here? Okay, QQQ is basically the one you want to use if you're trading. So that's really the only reason to own QQQ, because the fees are quite high. QQQ has higher fees, so basically has high fees. But if you're trading, it's good because it's very liquid. So very liquid, which means loads of people are trading that. If you want to hold, QQQM is basically cheaper. And you don't care about liquidity because you're holding. So that's probably better. There might be other ones that are cheaper. I don't know. You can look that up. Finding it hard to protect gains while running covered calls, says Kelly. Well, a covered call, Kelly, is exactly that. It's an exit strategy, right? So if you are in something that's running up, I don't know, like Sofi here or something, and you want to get out of this at a certain level, and you can turn on our little options tab here and say you do it monthly, and you can just sell a call option. Say you want to sell at $15. That's what you want to do. You then collect this is on 100 shares, you collect $20. So worth it? I don't know. It's really up to you. But yeah, you get a little bit of a premium for selling at $15. That's basically what it's saying. So if you go above $15, you're going to sell. You're still going to keep your $20 as a profit, but it isn't huge. So I'm not a huge fan of covered calls. I would use them if you were in something. And sometimes people come to me and they have all these sort of tech holdings of like businesses they want to get out of, and they don't want to get out right now. They think the market might rebound a little bit. So we help them set up the covered calls, and then they do that for a couple of weeks, couple of months. They collect a little bit of cash, and at some point they're going to exit at the point where they're happy. So, that's kind of good. Cheryl, appreciate the kind comment there on Trade Vision, and that's our intention, Cheryl. And it's gonna get a lot better because we're gonna keep adding so much stuff to this. And all you guys who are already in it, you get all that upgrade stuff for free because we want to say thank you for supporting us here early on and allowing us to do this, so we can really give insanely good data and news and tracking and dark pool data and your trade tracking and all that stuff to you at very, very, very low cost. because that's the only way we're going to reach a lot of people, right? It's doing it in a really affordable way. Do you have a favorite option strategy? Yeah, the one that fits the moment. I mean, probably spreads maybe because it's safe, but it really depends on the setup. It really depends on that. A Trade Vision tutorial, says Warren. Yeah, there are lots of them. Again, if you click on the little help thing here on the right, there are tutorials. It literally says tutorials up there in the top. And they are here for basically everything that we've got: breakout indicators, screeners, the options setup, stock charts, all the indicators. You know, we have videos on it, but also explanations if you prefer reading, so you can really understand how that works. The trade tracker as well, how you can import all your trades into it, so you can actually know what you're doing and you know what you've done well and not so well in the past, which is very, very useful. Slug DZ, you picked a first winner using a rules and Trade Vision. Brilliant. Well, make sure you apply risk management to that, so you actually keep it. And Patty, we don't run a Discord, Patty. We haven't done so for like 3 or 4 years. I'm not a fan of Discord. It's full of like spammers and scammers. So we run a private community for my coaching students. And I do share the trades that I do in there. So we have options communities and stock trading communities. And I'm actually working on something else at the moment, which I think is going to be quite exciting. I want to do something a bit more, less time intensive, I think, for people to learn and just help people with the fundamental need to just retire earlier, right? Get out of the rat race, retire earlier, retire better. And I think for that, you need to just know some of the fundamental rules around investing that I was lucky enough to learn as a former banker and apply those in a way that takes like an hour a month or something, like very little time, because I appreciate people are busy, but will help you make an actual plan to really accelerate that retirement timeline and also just retire a lot better so you can enjoy your life a lot better. So if that's something you guys are potentially interested in, write retire in the chat and I'll get a feel for whether that's something we should keep pursuing. I think it could provide a ton of value to people. So that's something I'm thinking about right now. And on that note, I want to wish you a beautiful day. Remember, the week is going to continue to be choppy. It's going to continue to be choppy until we know what Donald Trump is planning to do with tariffs. Okay. And I'm seeing all the retire comments there from Lorna. Fire. Yeah, I like the whole fire thing. I just don't think you should be living in a caravan to do it. So, you know, we're kind of more of the obese fire sort of crowd. And there's just ways to do that a lot of people are not doing very well. And there's a lot of retires here. Brilliant. Okay, love that, guys. And help my children. Yeah, and that's the same thing really. It's just like start being the one in your family who really breaks through the mold of making your money work for you, right? So when I see people and they're like, oh, my children got to get good jobs, I'm like, they actually don't. This is, if you do a good job with your money, your children don't need to get jobs. And they can therefore have a much, much funner life, a much more meaningful life, a much more fulfilled life without all the misery of that. And that's what I've achieved now. And I'm very, very happy for that. Like my offspring, when they come, will never have to work. And that's a really great feeling. And that's, I think, what everybody can achieve, literally just with some fairly simple tricks and hacks and financial education. So I wish you